Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss two aspects. First, what is the stance of Fed for the interest rate in the coming monetary policy? Second, outlook on dollar index because of Fed rate cutting cycle, and finally, outlook on dollar rupee pair. In 28th March meeting, there are two aspects which we need to consider. First aspect is what is the Fed is going to do. Second, what is their anticipation for the year 2025. Currently, we are expecting that Fed is not going to do anything in the March meeting. So the important aspect is what kind of guidance they are going to give for future. Now let us first understand what is the entire market is expecting for future guidance. If you see CME Fed Watch tool, which is currently suggesting that 30% of the people are expecting 50 basis point rate cut in 2025, and another 31% people are expecting that Fed is going to cut another 75 basis point. At CR Forex, we are expecting that Fed is going to cut interest rate by 75 basis point in the year of 2025. If Fed cuts 75 basis point, that is negative for dollar index. And if they are saying that they are not going to cut 75 basis point, then it will be a positive impact on dollar index. Now the question is whether they cut 25 or whether they cut 75. On what basis they are going to decide that? There are two metrics on which they can decide that. First is inflation. Fed is targeting that inflation should come near 2%. Second metric is how economic data points are showing, mainly in terms of growth and unemployment levels. Now let me show you an interesting data point. As far as inflation is concerned, entire market is expecting that inflation will be sticky, and inflation expectation on the consumer side is on a higher level. People are expecting that inflation in US at the end of 2025 could be near 4.5 to 5% because of Trump tariff, and second, commodity is showing signs that they are going to be trading on a higher level. And now let us see what is happening in US economy. First indication is GDP growth. Conference board have indicated that from 2.3% currently they are expecting GDP to grow at 1.8% in 2026. Unemployment will be little higher because of Dodge and US government removing people from government jobs. Third important aspect is US consumer confidence. US consumer confidence index is showing that it is trading near 2022 low. It means that people are not confident about their economy, because of which they will curtail their spendings, which is negative for GDP growth. Fourth difficult aspect is rising US debt. Currently, US debt is at the highest level, and approximately 1.178 trillion is spent on US interest servicing, which is equivalent or more than they are spending on their defense. So now basically Fed is in dilemma. Economy is showing signs of weakness, but inflation remains sticky. So whether Fed will consider economic data point, or they will continue to focus on inflation. To answer this question, let us see what has happened in history. In 2001, because of dot-com bubble, unemployment rates rose significantly higher from 3.9% to 5.7%, forcing Fed to cut interest rate aggressively. Second incidence was in 2007-8 period, when Fed was forced to cut interest rate aggressively because of subprime crisis or housing bubble. And the last time when the Fed had to do this was in 2019 because of trade war implication. GDP in 2019 started falling down. Manufacturing index were showing signs of weakness. At that point of time, Fed had cut interest rate from 2.25% to 1.75%. So in order to conclude, we can say that even if the inflation is sticky, but if the data points are showing weakness, then Fed can decide to go and cut interest rate aggressively. So now let us conclude what is the view on dollar index. Currently dollar index is trading near 103.50 kind of levels. In the short term, dollar index can bounce back towards 105.50 to 106 kind of level. But the bigger pictures remain that every uptick has to be taken as an opportunity to sell dollar. We are aiming that dollar index ultimate target is 102.20 and 99.50 by the end of 2025. Now let us discuss outlook on rupee. For the first time in last 15 days, rupee closed below 87 levels. There were few reasons for the same. First was FII invested 23,000 crore in debt market for the month of March. Why? Because India's real yield were positive as compared to US. Second, our inflation data came good. Inflation was at 3.6% versus 4.1%, and our industrial production data was also encouraging. Now there are some challenges also. First challenge is FII are still selling in Indian equity market. Second, Indian banking system is facing liquidity deficit, because of which RBI will continue to do buy sell swap, which is going to put pressure on rupee. Finally, dollar index might bounce back towards 104.50 to 105 kind of level, which can again put pressure on all emerging market currencies. So technically speaking, we can say that rupee can consolidate between 86.80 to 87.45 to 50 on the higher side for few more days. Any breakout or breakdown from any of these two levels will give us a 50 to 75 paisa momentum in a fast and furious manner. The biasness remains that it can break 86.80 level and can move lower. With this, I will end my today's presentation. Jai Hind, Namaskar. फिर मिलेंगे next week. Thank you.